Hey guys, it's Boris. It's Friday mid-morning. We just finished up live trading. It's been about an hour since then, and I want to take you behind the scenes today. Instead of just showing you the live trading highlights, which we've done all week long for the last month or so, I want to show you my own account, some of my own trades that I did. Let's go through the mistakes, the good trades, and the underlying philosophy of what I was trying to do that I think will help you understand why we consistently make money in the live trading room and where I could really improve. And through hopefully my own improvement, you can see your own possibilities as well. So first of all, the trade that we did on live trading was this is post non-farm payrolls. Numbers were good. The numbers were okay. Now numbers are basically okay, but we really care about, of course, is the price action, and the price action was positive. The price action over here, as you can see, the blue above the black, that's our first component. We want trend. And the second way that I think the best way, I took a walk today and I kind of realized that the best way for me to explain this is that when you just kind of get rid of all the arcane rules of what my setup is, it's basically making sure that I am on trend when I make the initial entry. So when you're looking at this entry over here, it's actually, this is entering after this candle. So it's always going to be whatever is the past candle because it's just the new candle that opens up. What you see over here in my live trade is that the candle is green, the trend is positive. That's literally as simple as it gets. There is obviously reference points made by arrows. There is candle on close entries. There's volatility parameters. There is trend separation parameters. Those are all important, nice to have things. But ultimately, the purity of the setup is it's got to be in sync with the overall trend. I want to be green when things are going up. I want to be red when things are going down. If I can just do that consistently, that puts me on the proper edge. Doesn't always make me win, but it does make my trade correct. It does make my trade proper. It does take my trade good, which is what you really want. What you're doing any other time is basically guessing. Sometimes the guesses are right, sometimes the guesses are wrong. But what you want to be doing is making trades. Sometimes trades are good, sometimes trades are bad, but trades in the end are always superior to guesses. So this was the live trade. Then as you can see, kind of, post hours, we close up. I see this massive break. And this is a serious failing of mine of just chasing, which I think is a failing of everybody. So this is a massive volatility candle. Buying this big breakout. Yes, there was continuity, right? As you can see, there was continuity. And I buy over here. You see this little blue arrow over here. This is my exit. But here's the problem. Because you are buying you're so off base when you're buying. You're so offline. It's like a tennis player who's like really behind the ball. You're so off balance. You're scared. You're trading scared money, and this is the constant frustration. If you're going to commit to sort of the flow setup, then commit to losing the whole candle. Commit to taking this massive risk. And of course, I don't want to take the risk. I'm just going to take a small amount of money. And what winds up happening is you just nickel and dime yourself into what potentially could be a much bigger trade. So this was a trade that was proper in its idea and terribly sucky in its execution, right? Then we get the other way around. We go the other way around and we start showing negative trend. Here actually, my problem is I jumped the gun too soon with the same kind of consequences, which is that I am closing my profit way too early. And the reason why is because I see this big reversal candle. I'm like, ooh, price, they're taking profits. Trends are starting to go down. I want to get short. This is all correct thinking, but terrible execution. Because what I'm doing here is I'm like, the volatility is so quick, and I'm just so scared of not making of getting stopped out on a reversal. Basically, what I love to call the right wrong trade, meaning that you're right on direction but just wrong on volatility, and you get stopped out because your stop is too tight. So I'm worrying about the stop being too tight, and I exit myself too early. On the other hand, had I been a little bit more patient, one of our critical structures is if I get a reference point, the first reference point in trend, meaning I have a negative reference point in trend, meaning the trend is negative in this case, right? So it syncs up with the start of the trend. Moving averages start to separate, they're going down. Me taking a trade over here, once this is proven to me, and this is the key thing, the market is proving to me that I am going down, that the trend is going down, then it would have been a much smoother trade, right? So fine, so be it. I do get, oh, and now we get into the interesting territory. So now we get into kind of my bad habit of trying to pick bottoms, right, or trying to pick tops. That is, trying to pick reversals. Now, let's talk about this trade, because this turns out this is actually a loser trade, right? So I am actually buying a entry over here, and I get stopped out right over here, right? So this is a bad trade, but not an incorrect assessment. Because if I'm going to trade reversal, right, remember that the underlying methodology of mine is that whatever direction I'm choosing, the most immediate candle, the trigger candle has to confirm my direction. So if I think, okay, things are completely oversold and there's potential for reversal, I need to see a green candle before I could even commit to the idea of reversal. So this is obviously way too early, and obviously you don't want to be looking at the first green candle in a massive sell-off, and I miscalculated. But miscalculation is not the same thing as making a stupid guess. This was an incorrect trade. This was probably a bad trade, but not necessarily a dumbass guess, right? Similarly, when we get over here, I practice the same idea. I have a green candle, I buy, sell here. That works out perfectly. That works out really, really well to the upside. Then as you can see, even more green candles come in over here, and all of these trades, boom, 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 work super well. And that's really the critical thing, that you need to understand that sometimes your process will work, sometimes your process will not work. But if the process is logical, it will work more than it won't. So whatever the error I have over here is more than repaired by this sequence of trades over here, right? And they all start to work. And then in addition to which, here comes another sequence of trades that works to my favor. I have more and more selling, and I wait for a buy candle, I buy it, and boom, it reverses. Now, many of you are going to ask me, why are you trying to pick bottoms when this is such a clear, definitive downtrend? And my answer to you is, it's exactly why. Because as you can see over here, the trend is so severe, and there are so few opportunities for what we call our favorite failure setup. In this case, the failure setup would be for us, the only opportunity was to sell the low of this candle, would be to enter over here. This would have worked. This actually would have worked, but just barely, because so much of the move had already happened. And I was basically looking contextually. Like if I had a buy reference point somewhere around over here, right at the beginning of the trend, I would be a lot more comfortable getting short on a sell on a red candle, because obviously there's a lot more to go. But once you've had like already an hour worth of intensified selling at this point, the probability of continuous selling exists, but it diminishes, right? It goes from, like, let's say, just for argument's sake, I mean, these are not real probabilities, but just for examples, it goes from like a 90% or an 80% continuity probability to like maybe a 20% continuity probability, and you're constantly looking for the higher probability trades. And the high probability trades in this case is reversal. So much selling has happened, right? That if you get any sign from the market that it's done selling, that the buyers are essentially changing the mode of supply from supply to demand, right? If what you're looking for is changes in price action from demand to supply, from supply to demand. In this case, obviously you got demand here, and as you got demand, you could have bought that, and that trades fine. And then finally, as we start moving around over here, we get into we get into a change of trend. So now we have a positive trend over here into kind of like, I guess, 10, 11 o'clock hour, as the market's having sold off now, come back up against, by the way, this is all against the background of Biden getting more and more votes, getting more and more confident that he's going to win, and the market really becoming convinced that it's going to be a full-on Biden win, right? So once you start changing a trend here, you're now obviously looking for positive trades, right? And here's where you make mistakes that I'm sure many of you do. And where making this mistake, by the way, is better than still guessing. But let's understand why, let's understand this particular trade over here. So the structural trade that I need to make is I need to be long this candle over here, right? But I go get a cup of coffee, I go walk my dogs, I move my eyes off the screen, right? So that means I miss this opportunity, right? How many of you, I'm sure, have the same situation? You're missing this, you miss the actual true opportunity for entry, right? So you miss this opportunity for entry and you're like, damn, this is still a good trade, trend this up. I really want to get long. I'm looking for an opportunity to get long, right? So then I look for the next, I'm basically coming in over here. Then I'm looking for the next opportunity to get long. Obviously, in this case, I come in over here on this green candle. It's already, I'm late. I'm like for example, the close on this candle is 83 and I'm coming in at like 97, right? I'm coming in 10. I'm coming in when the profit has already been done, right? The profit has already been eaten. And I'm like coming into an empty plate. I'm like, oh, please give me Mr. Market, give me crumbs. And I'm basically lucky to get away with a few crumbs. I make a little bit of money here after suffering a pretty serious drawdown because my execution is bad, but not my thought pattern, right? My process is still on point, meaning that I am buying in an uptrend. I am not, and I'm buying on a green candle, which is really the important thing. I didn't walk into a complete idiotic trap, just a minor trap. I was able to escape from it finally, right? Then finally, we get into a reasonable trade. Now, so we have this reference point over here. This reference point over here gets reversed by this candle, and I enter, right? Here, again, I suffer a small execution issue. What happens is my algo times out. It has a 10-period timeout. As you can see, there's a long gap between this reference point and actually when the reference point gets broken. So my algo times out, and I'm like, oh damn, I didn't automatically get into the trade. So I get into the trade a little bit late. Because I get into the trade a little bit late, I am behind on my score, right? I don't have the opportunity to make a full 10, so I make full 7, and I get out. And here's the reason why you do this. You do this because if you don't, we have a 10-point target. You can see here you had a margin of safety of 3 or 4 points. In other words, you could have maybe made 12, you could have made maybe 13, but that's all the market gave you. After that, it was just profit-taking territory. And you lose, you snooze. So you go through this journey with me today, and you see that, yeah, a whole bunch of execution errors. But what isn't happening is process errors. What isn't happening is analytical errors. What isn't happening is me guessing. So this is where it all becomes, I think, really important to understand. Despite the execution, despite FOMO, despite being late, despite being stupid, despite being off the desk, despite making a couple of dumbass mistakes, just by trying to buy only on the flow candle, that is the candle that goes in the direction that I think market is going to go on, I manage not to lose money, but to make money. Not as much as I wanted to, not as much as I could have, but nevertheless be positive. And that is what I want to leave you with, that your edge is in the process, and you can always, always, always refine your execution. Once you know how to sink a basketball, you can do a million free throws. Or once you know how to serve a tennis ball, you can do lots and lots of serves. The critical thing is to know how to do it right in the first place. Hopefully you guys enjoyed this little review for the week. And I will see everybody in my live trading room on Monday, working on my execution to get all my process even more profitable. Thank you guys. Everybody have a wonderful, wonderful weekend. I'll see you later.